Alright guys, I just wanted to do a quick update on Nvidia earnings. So as we all probably know, if we're actively in the market, Nvidia reported good earnings. I predicted 1 to 3% beat, and we got 2.13% beat of the earnings. So it's dropped, and the entire pump from that earnings beat has been faded on Nvidia, what many would argue is the most important stock in the world right now, for bulls at least. And yeah, it's been completely faded in after hours. This is exactly what I thought would happen, which is why I will post this before market open tomorrow to say, yep, it's going to be a bad close of the week. Market open might be okay tomorrow, Thursday, February 26th. Friday might start okay, but I'm pretty sure the week will close bad. And if it doesn't, I'm pretty sure next week will. We have Hindenburg omens. We are 3% from an all-time high, I think, in the market. And we just have everyone going risk off. If you are waiting for 695 or whatever, SPX 6,980 or something to get puts, you are waiting too long. I have full ported puts. I am fully in puts, and I just want to post this to show that I am in them now. And we have investors going risk off, right? The SPX divided by gold chart shows you we are at a key line of resistance. As you know, metals have gone up. Investors are going into low risk asset classes. We have a soft landing from the 2022 highs. So everyone's just been going to blue chips. As anyone who's been in the market for a couple of years at least probably realizes, okay, the biggest companies are the only ones really consistently bullish. And now the blue chips that the investors are going for are not even stocks. And I'm calling that now. The rotation's been happening for months. So this is not news, but a lot of people won't tell you that the reason that gold and silver, precious metals, the defensive sector like Lockheed Martin, etc., the energy sector, the reason that these are outperforming the stock market, well, the other asset classes of the stock market, is because investors are going risk off. They are becoming even more risk averse than just buying blue chip, Magnificent Seven stocks like Nvidia, Tesla, Amazon, Apple, Microsoft, like those. They're even more risk averse than just buying those. Okay? And what this means is that tech is going down, which you can see if you look at QQQ. You can see tech is going down, right? And don't trust, test. Don't trust, test. So if you don't believe me, just go to TradingView, and type QQQ, and you can see, okay, QQQ is looking a little weaker than it was a few months ago, for sure. Don't trust, just test me on all of this. SPX divided by gold, you can see, oh, okay, it looks like metals are being invested in more. SPX is now under a resistance line when you look at its evaluation to gold. Just all of it. Tech is down, right? I was waiting for today for some clarity, because I figured, okay, if we truly have a consolidation period we've been in for SPX and Nvidia and stuff, then Nvidia will the earnings of Nvidia will make the market pivot to a more risk-on like state. But even with that as a bullish case, in the back of my mind, I thought even if Nvidia beats it, I don't think it's going to change the market structure much. I think the market's going to fade the pump, which they've already done now. And so they faded the pump. And I just want you guys to realize that this is a good confirmation that this is bear market, price action. This is, I'm not saying we're going into a recession, but a correction, I think, is a conservative estimate at this point. And that's how all the big money is feeling, which is why they're being very risk averse. So yeah, I just want you guys to be cautious, especially if you're uncomfortable with doing puts. Be cautious. This is looking more and more like a distribute. I don't know why everyone's speeding, dude. Like, but anyways, like there's fucking like a group of like four kids running around like speeding, dude. But yeah, investors. Sorry, I got distracted. It's weird. Investors are being more cautious, and that's what all the big money's doing. That's why they're going into energy, defensives, metals, commodities like healthcare and financials. That's why these are doing okay, and why the technology groups are no longer doing okay, because they are less speculative. They are less speculative. Coca-Cola is trading around the same PE as Microsoft, right? 3 years ago, that was stupid. That was like stupid to think that would happen. If you were new to the market, which I was, pretty new to the stocks at least. I've been into crypto for longer, but yeah, the PE ratios are just not as good in the tech sector, and this is not going to be something that's going to be pivoted away from soon. That's what I believe. I believe we need a correction. I believe we are in a distribution phase. We are not in a consolidation phase. I have more puts than I should, probably, from a risk standpoint. But I just wanted you guys to be cautious of this stuff, because this is overarching trends. These are narratives that do not change so quickly, generally. The business cycle is coming to an end in probably 2 to 3 years, max. And so I'm not saying a recession is coming, because I know business cycles tend to end in recession. And if you are born in even the 90s, the 2000s, this is the first business cycle you're living through as an adult. This is the first one you will live through, likely. Unless you die or something. It's the first one you'll live through. So I guess it's pretty likely. So they end in recessions, but we have 2 to 3 years max. I believe it won't be a recession in the next year or whatever. I do believe Trump will keep the markets up as best as he can. He seems to really be keen on that. This is getting longer than I wanted it to be, but yeah, he's really keen on keeping the markets up. So I think it'll just be a correction. I don't think we're going to have a recession. I'd be really surprised if we had a recession within the next 6 months or so. But once you get to past 1 year, 2 year, I wouldn't be so surprised. But like I said, I think it's going to be more towards the 2 to 3 year, 2 to 3 more years, because I think Trump will kick the can down the road. We're going to cut rates in June, likely. But that still gives us a lot of time, guys. It's not even March yet. And bulls are waiting for something. They get good tariff news, market doesn't care. They get good Nvidia earnings, market doesn't care. I mean, I made this video just because there's all this that I can just say without showing you charts and stuff. I have plenty of charts that could suggest, there's some downside, but this is just fundamental stuff. The market is not risk on. You can give them good earnings, you can give them good tariff news. They're not risk on. If you cut rates, maybe like in the next couple weeks, maybe it could change. It could kick the can down the road. Maybe we wouldn't see a correction, if we aggressively cut rates, but that's just not going to happen. We get a new Federal Reserve chair soon. That's more uncertainty in the markets. We still have a rate cut prediction of June, though. So yeah, it's just not looking too good, guys. If you're a bull, please just be cautious. That's really all I want to say. I'm bearish, so maybe join me on that, maybe don't, but because we'll see. Markets are not easy to predict. This is not financial advice, so do what you think, but be cautious, guys, especially if you're bull.